Welcome to the era of artificial intelligence, AI. AI has transformed our world in ways we couldn't have imagined just a few decades ago. This groundbreaking technology is no longer science fiction but a reality that is integrally connected to our daily lives. Today, we will delve into the fascinating world of AI trading and ponder over the question, can artificial intelligence do trading? Is the future for artificial intelligence? Stay tuned to find out. The financial market is an intricate web of numbers, trends, and predictions. It's how investors navigate this web that largely determines their success. This is where the role of artificial intelligence comes into play. AI can interpret colossal amounts of data in mere seconds. It can recognize patterns that are invisible to the human eye, and most importantly, it can make decisions based on these patterns in real time. However, the implementation of AI in trading is not without its challenges. Various factors need to be taken into consideration when machines make decisions. The market can be incredibly unpredictable, and sudden economic or political events can affect investments. This raises the question, are machines equipped to negotiate this level of unpredictability? Can they respond effectively when market dynamics shift unexpectedly? There are two types of trading that AI can assist in. First, algorithmic trading, the use of pre-programmed instructions to execute trades based on a variety of factors. Second, high-frequency trading, which uses complex algorithms to analyze multiple markets and execute orders based on market conditions. Algorithmic trading has the potential to reduce human error, improve speed and cut down costs. It can efficiently execute repetitive tasks, freeing up human resources to tackle more complex issues. However, high-frequency trading is not quite as effective. The sheer unpredictability of the market can sometimes cause machines to engage in potentially harmful trading strategies. Another concern surrounding AI trading is its propensity to amplify market trends, both positive and negative. Take, for example, the flash crash of 2010, when the Dow Jones Industrial Average fell 998.5 points, almost 9%, in minutes and then rebounded, all because of high-frequency trading algorithms. These extreme market swings create significant challenges for traders worldwide. At the same time, we can't ignore the tremendous potential AI trading holds. The ability to process immense amounts of data and react in real time can offer significant competitive advantages. It can also help bring better stability to the stock market by analyzing trends and making predictive market models. Beyond equities, AI is also being used in currencies and cryptocurrency trading, fixed income trading, and even futures and options trading. The effectiveness of these systems varies, but there are clear signs that the market is improving with every iteration. AI is currently continuing evolving, and so is AI trading. As more research is conducted and more data is analyzed, we are likely to see increasingly more efficient, stable and profitable trading models. Despite its many challenges, AI trading is turning into the future of trading. Robots and advanced algorithms will soon become paramount in the everyday commerce world. And with that, the question of whether AI can do trading is being overtaken by the burgeoning realization of having to do trading to remain relevant and competitive in today's fast-paced market. However, AI trading is not just a matter of technology and mathematics. It is also about ethics and human decision-making. How can we find a middle ground where we can leverage AI's capabilities without creating unnecessary marketplace distress? This is a fundamental issue we need to consider as we move more firmly into the age of AI trading. Besides, the widespread usage of AI in trading begs the question, will we soon transition to a world of zero traders? If machines are capable of thinking, deciding and acting faster and more efficiently than humans, the need for human traders will dwindle significantly. This change, however, comes with its own set of challenges and implications. Even now, the concept of AI trading is not uniformly accepted across the financial community. There are many financial institutions that still rely on human intuition and decision-making. However, as technology continues to evolve and improve, we are likely to see greater acceptance and adoption of AI trading systems. Regardless of the philosophical debate, the commercial prospects for AI trading systems are profound. The financial services industry will continue to see strong investment in AI-based trading systems, making it an area of rapid and significant growth. Stock market investors and traders who embrace AI could potentially enjoy a huge competitive advantage over those who do not. It's crucial to remember that AI, like any technology, is just a tool. It can be incredibly powerful, but it is only as good as the information it's given and the way it's programmed. The success of AI trading systems will rely heavily on the teams who design, maintain, and use them. Human judgment, creativity, and the ability to make decisions based on qualitative information will play a vital role in financial trading for the foreseeable future. It's highly unlikely that trading will become entirely automated. Instead, AI is more likely to augment the capabilities of human traders, facilitating better decision-making and more profitable outcomes. The potential applications of AI in trading are vast and increasingly sophisticated. AI can play a critical role in identifying important trends that human traders might miss, making it a valuable tool for financial risk management and decision-making. Even now, many financial institutions are integrating AI into their trading operations. So, can AI do trading? The answer is an unequivocal yes. AI is already capable of analyzing vast amounts of data, identifying trends and patterns, and making decisions based on that information. The question, however, isn't whether AI can do trading, but rather how much we should rely on it, and what implications the increasing use of AI in trading will have. AI trading is a rapidly evolving field with an exciting future. While there are indeed challenges to overcome, the potential benefits for the financial sector are significant. The combination of human judgment and AI analysis could create a balance that optimizes trading strategy and performance. This could potentially lead to reduced risk and increased profitability. Regardless of whether AI trading becomes the dominant form of trading, there's no denying its enormous potential. As technology continues to expand and evolve, AI's impact on trading will only grow. This is an important time for both those already within the financial industry and new market entrants to consider their strategies around AI. Technology and automation have always been crucial aspects of trading. With the rapid advancements in AI, the next stage of evolution promises to revolutionize the financial markets once again. While AI trading is filled with both possibilities and challenges, ultimately, its success will depend on the human elements of design, implementation, and supervision. If you like this content, don't forget to hit the like button, subscribe, and remember, artificial intelligence is our ally to grow the global economy.